Hello everybody, welcome back to the channel. Very big thank you to all the new Patreon supporters. And without further ado, let's jump right into it. Most retail investors, that's everyday normal people, are still very much interested in investing in digital assets, despite experiencing what is arguably, I'd argue that, the worst bear market in crypto history. According to a recent survey report by social trading platform eToro, more than two-thirds, approximately 69% of retail investors revealed that they are actually positive or have mixed feelings about the impact of the prolonged market downturn recorded last year. The remaining one-third, approximately 31%, stated that they are wary of investing in the industry after the crash. So normally the downtrend in the market doesn't historically last as long as this one has lasted or is currently lasting, depending on where your price numbers and metrics actually are. I don't really know anyone who's like hyper negative on the market. I think a lot of people became quite frustrated and annoyed that the market was going down for so long over last year. But I think one of the main I know that one of the main reasons why the market was going down was because of the entire battle idea issue that we had with inflation. If that had never been part of the discussion or the topic, cryptocurrency prices probably would have begun to recover around September, maybe even October. Remember, that was around the time when we also had news, or rather, remember, Bitcoin was like actually moving back up to around 23, 24, 25,000. There were like already discussions of Bitcoin going back up to 30,000. That's why, once again, I found the entire thing with the FTX saga so weird for the timing that was when the cryptocurrency bear market, if you will, should have actually ended. Commenting on this renewed interest from retail investors, eToro's global market strategist Ben Leidler, Laidler, said, "The fact that two-thirds of retail investors feel indifferent or even more positive after the worst year for markets in a generation might seem odd, but the majority of this cohort thinks in years and decades. For those with longer time horizons, the back end of 2022 has offered a chance to buy companies at lower valuations, improving the outlook for long-term returns." Yeah, everyone I know who's an actual, and I'll give them the title investor, who has been investing for 3 or more years, whether it be just in crypto and stocks or even real estate, a lot of people were actually kind of happy that prices went down. I have a friend, he's been waiting for property prices to go down for a while, and they finally slammed down in his area. He was like, I can finally buy something. A lot of people were waiting to get into the stock market, but when you have a continuous bull run over the course of 12 to 13 years, the market doesn't look that attractive to get into. However, it does when companies end up falling by 70, 80% over the course of 13 months. Is like, okay, I don't mind actually getting into the market. It's the same exact thing with crypto. I think a lot of people in crypto have a very special mind frame about a lot of things, i.e., if prices go up in crypto, I get happy because I'm making money. If prices go down in crypto, I don't mind it because I know that I can just buy more of the things I was going to be buying at a cheaper price, and that eventually when they do go back up, I'll make even more money than I was going to make before. It's a really weird loop-de-loop, if you will, for the mindset in crypto. Yeah, I'm not surprised by this at all. I think everyone who's still here has probably been buying, still has a huge amount of interest in the market. And especially, usually, for those of you who haven't been here before, that is to say, not the channel, but in this like form of a cycle, you see the interest creeping back into the market because prices are up. When Bitcoin gets to around a $30,000 to $35,000 Bitcoin, everyone's going to flood back into the market at the exact same time, because it's going to be an indication to them, and they're also going to start hearing on traditional news, wherever they get their news from, that this is basically like the bear market's over and the bull market is back in full swing. But the amount of people who are going to refall back into the market is going to be, it's always the same exact cycle. It's always quite spectacular to see the money that could have gotten in earlier when Bitcoin was at 16,000 but they rush back in when prices are higher. They cause other people to rush back in, and we end up hitting a brand new all-time high, and it's just how it always is. That's the nearly 70% of retail investors are unfazed by crypto prices falling last year. Yeah, because I think we know, if you've been here multiple cycles, that eventually prices will go back up. It's just kind of the thing that always happens. That's the retail investor news. And yeah, let's move on. Also in the news, California-based digital asset trust and security company BitGo has listed, you guessed it, Shiba Inu, because it's in the news every single day. BitGo recently announced that it has added support for Shiba Inu and Dogecoin on their platform. As per the announcement, BitGo users would now be able to store, send, and receive the two popular cryptocurrencies SHIB and Doge on both custodial and on hot wallets. There's a tweet for it right there. It says, now available from BitGo, hot wallets, and qualified custody for Doge and SHIB. And then they have a photo of the two coins, and then they added the two coins, and then they $signed both the coins as well. BitGo is a California-based company that offers a range of services related to digital assets, including regulated custody, financial services, and core infrastructure. The company caters to both investors and builders in the digital asset space, providing secure and compliant solutions for managing and trading digital assets. Wonderful. So, not the kind of news that we really need to dig deep into. It's more of a, if Shiba Inu, I mean, it's kind of weird how much or how often this coin is in the news at this point. If it's not the coin burn news, it's the layer 2 solution news, or it's the metaverse something, or it's the people making a crazy announcement of something that's going to be coming on. Or I just really, listen, I had assumed that Shiba Inu and both Dogecoin had simply been available everywhere at this point, on every single exchange, everywhere within like at least 7 planets away from us, because they're both so popular, but apparently not. BitGo has added support for Doge and Shiba Inu. Wonderful. Let's move on. And I thought this would have been big news. The non-profit organization, the Stellar Development Foundation, announced joining a new advisory committee of the United States Commodity Futures Trading Commission. According to the statement, the Stellar Development Foundation will be one of 4 crypto-focused organizations at the Global Markets Advisory Committee, or GMAC, which is one of the 5 active advisory committees overseen by the CFTC. So they have 5 committees, and within those 5 committees, there are other companies who are within the smaller committees that make up other smaller committees that build onto the entire advisory committee, which is it's a lot going on. The firm behind the Stellar blockchain will join representatives from traditional financial players such as JP Morgan, Goldman Sachs, and BlackRock. Since the Stellar Development Foundation represents the blockchain industry on the Global Markets Advisory Committee, the foundation expects to bring the focus on Layer 1 protocols and remittances. The organization also plans on highlighting the role of stablecoins in the digital asset market and real-world use cases as part of the committee. In the statement, the Stellar Development Foundation stated that it is excited to join the many traditional financial players on the CFTC's new committee, and also believes the Global Market Advisory Committee will serve as an opportunity for conventional finance and blockchain to find prospects for integration to ensure the integrity and competitiveness of U.S. markets. If the SEC doesn't get it together, there's no competitive anything. I don't know what they're talking about. They said after an active 2022, someone's lying, SDF's engagement with government agencies is more critical than ever. Our inclusion in the CFTC's GMAC is yet another opportunity to push the industry toward mainstream adoption. I look forward to work ahead of us under Commissioner Pham's, that's PHAM, leadership and the chance to represent blockchain technology and our industry. So I had assumed that this would be popular news because a couple of years ago, I'll give it even a good 3+ years ago, anytime that Stellar, that is to say Stellar/Stellar Lumens was in the news, a lot of people usually went crazy for the news because they made it seem, or rather, I'll give it to you easy. Ripple was the thing that came out first, and then eventually some people from Ripple ended up leaving, lying to themselves and to the community, saying that they were going to create something better and different. And they basically created Stellar. And Stellar is basically a copy of Ripple. Someone, I can feel you getting riled up. If you weren't here before, I don't know what you were doing with your time back in 2016, 2017. And the problem is that Stellar didn't really make it as far as Ripple. This is why we hear about Ripple in the news all the time and all the Ripple partnerships and yada yada, but we barely hear about Stellar. So years ago, whenever Stellar was actually in the news, it was usually a way for people who actually purchased Lumens to try and convince themselves that they had done something better as opposed to buying the XRP that everybody else was buying. So I assumed that this news was actually going to be major news because normally we would hear years ago from tons of people who actually held Stellar Lumens. They were like, yeah, finally something's happening with the coin that we shouldn't have purchased. But, I guess maybe they all actually just left the coin or something like that at some point because Stellar's price didn't even rise on this news that we have right here. I guess it's also because there's no mention of them actually using Lumens or using the blockchain. What was that other thing? There were also two major companies years ago, who announced that they were going to be like putting stablecoins on the Stellar Lumens blockchain, but that also didn't end up happening, or we hear nothing about. Was it IBM? I feel like it was IBM. I'm going to say the letters IBM once again. So cool. Stellar Development Foundation has joined the Global Markets Advisory Committee, which is one of the 5 committees overseen by the CFTC, I guess, to lobby and give proper cryptocurrency insight on where things are going. I don't really know. I feel like this all should have just been done by the SEC about 7, 8, 9,000 years ago. But alas, here we are. Yeah, no, I was really shocked. I saw this and I was expecting to find more articles about it everywhere, and I found none. This was the only one that was actually talking about it. So it's cool to see that Stellar is still active, but I don't think anyone's actually using it or building on top of it at all. That's the Stellar Development Foundation news. And yeah, let's move on. Also in always popular news, a representative for Gemini, the crypto exchange, confirmed on Monday that the company will be laying off 10% of their workforce. Gemini, which was co-founded by the Winklevoss twins, is subject to New York banking regulations. What? That's crazy. And has had to make at least 3 rounds of layoffs in less than a year. As of November of last year, PitchBook estimates, what is that? Estimates that Gemini employed 1,000 workers. This would imply a loss of jobs of around 100 people, logically 10%. It was reported in August of last year that Gemini had reduced its workforce by 7% after a 10% reduction in July as well. Since Sam Bankman-Fried's exchange, FTX filed for bankruptcy on the 11th of November, several cryptocurrency companies like Crypto, Coinbase, Kraken, and Genesis have cut their employees. In an attempt to save capital amid the cryptocurrency market collapse, Coinbase laid off another 20% of its workers in early January. Once again, I don't buy any of this. Everyone's using FTX and Sam Bankman-Fried as this gigantic shield to do what they wanted to do a long time ago. A lot of these companies, like, they're big companies, but you don't... What was the other one? There's one of these companies who had like 14,000 employees, and it's like, what? Like, you don't need that many employees. So I'm sure they're realizing that on all of their order books, and they just, using the idea of FTX or Sam Bankman-Fried as, oh no, we also have to fire people as well. I say popular news because every single day there's news like this on multiple different websites. I don't know what the goal is in constantly reporting that there are layoffs from these companies. A lot of people even see it as a positive thing, which is also a little weird. The idea that the more people who they fire, so the less people who don't have a job and can't pay their rent, the bigger the company grows. And it's like, oh, that's cool that they're just over there firing people. It would have made a lot more sense if you just simply hadn't hired these people in the first place. Like, we all knew that a bear market was coming. It's just more so like ours was a bit elongated. Anyway, So, awesome, question mark. Gemini has laid off another 10%. I don't think Gemini's not public. Gemini's not on the stock exchange, so this won't be raising their stock numbers, but I assume the valuation of the company as a whole is going to rise. They're still a boring company. I had assumed years ago that they would have done exactly what Binance is doing, expanding around the world, but they are quite comfortable, I guess, just sitting in New York. That's because of Sam Bankman-Fried and FTX collapsing, Gemini has had to lay off another 10%. So that is now officially 27% of their workforce has been fired. Darn you, Sam Bankman-Fried. When will your reign of terror ever end so that people can stop getting laid off? News. Yeah. Moving along. So this article is very weird. It reads like someone wrote it and then threw it into Google Translate about 15 times. So bear with me. Since the implementation of EIP 1559, a total of 2.8 million Ether, roughly around $4.6 billion, has actually been burned. It says, and I do quote, "The protocol has been burning ETH, which is crypto language meaning destroying, at a tremendous rate as part of EIP 1559 issued back in August 2021. EIP stands for Ethereum Improvement Proposal. Got it. According to EIP 1559, a percentage of each Ethereum transaction is discarded. This includes a component of every NFT trade, yield strategy, and even straightforward token transfer. Everything is currently being set ablaze." See, I told you, it reads like someone wrote it and just kept on throwing it into Google Translate, and this is what we got. Since the implementation of EIP 1559, a total of 2.8 million ETH, equivalent to around $4.6 billion at today's value, has been taken out of circulation. According to Ultrasound Money, the Ethereum proposal has been responsible for the burn of more than 16,364 ETH in the past week, at a pace of around 1.62 Ether being burned per minute. Yeah, so we're back in the territory of everyone's talking about EIP 1559 and how many Ether are being burned apparently every single minute. This is basically because we still are on track, apparently, allegedly, to get the next Ethereum upgrade Shanghai sometime in March. Everyone's very fascinated. Once again, the amount of Ethereum transactions have picked back up on the main network. The amount of smart contracts being created has also picked up. If you missed the news just a couple of days ago, we also had information that the NFT market, I believe, is back up several 100% just since the beginning of this year. A lot of people are once again back into NFTs. The prices have begun to rise once again, and tons of people are buying and selling them, and therefore more Ether is also being used and being processed and also being burned as well. We are re-deflationary from where we were before. The amount of coins being burned continues to rise, and a lot of people believe that relatively, I assume after March, I'll give it even a good June or July, the amount of Ether that will be locked up will also constitute as well to this, as there would be a very minuscule circulating supply, as nearly everyone will be staking their Ether. And it just keeps going on and on and on. This was actually quite popular news. It is, listen, it is a huge amount to think that basically every time anything happens on Ethereum, Ether is then being burned as well. Yeah, $4.6 billion has been burned. It's a little insane, and this is all happening during, and I air quote here, during a bear market. We haven't really re-entered bullish territory. That happens when Bitcoin goes officially above $30,000. So just imagine when prices, begin to skyrocket once again and we get a $2,000, $3,000 Ether. It's going to be quite interesting. That's the Ethereum burn. $4.6 billion worth of Ether has been destroyed. News. And yeah, let's move on. Also in the news, this was really popular because a lot of people don't read articles and they just read the headline. It says, prominent Tesla investor compares Bitcoin to a cockroach. And that was all over the place. Everyone was like, that guy's a loser. He has no idea what he's talking about. And the people read what he was saying and they were like, oh, I totally agree with him. Prominent Tesla investor Ross Gerber believes that Bitcoin is here to stay after the largest cryptocurrency managed to defy the odds yet again with a spectacular performance in January. Taking to Twitter this morning, Gerber, the co-founder and CEO of Gerber, whoa, that sounds rich, Gerber Kawasaki Wealth and Investment Management, you know he has money, wrote, another fun day for Bitcoin, 23,000, and defying the haters who were short was dead. But no, Bitcoin is like a roach, returns every time. And then apparently he tweeted a roach emoji, which I feel like was unnecessary, but is what we got. The investor has long been an advocate of cryptocurrency, so his tweet can hardly come as a surprise. So that's basically the news. This was super popular. I'm not joking. A lot of people were like, dude, don't call Bitcoin a dirty insect. You have no idea what you're talking about. And then people were like, oh, he means it is resilient and awesome. That's absolutely wonderful. I'm not sure how we got here as an industry, but it's basically where we are. There's even like a paragraph here explaining why he called it a cockroach. I wish I was joking. It says Bitcoin is indeed similar to a roach, an almost immortal creature, what? That has long resisted extinction in an ever-changing environment. Who wrote this? The resilience of the roach comes from its adaptability and ability to survive in a wide range of conditions, while its simplicity provides them with distinct advantages over more complex organisms. This is nonsense. For those of you who don't know, the reason why, I'm pretty sure you've heard before, should there be an event that gets rid of humans, mainly the roaches would survive, it's not because they're immortal. It's not because they can resist chemicals or other things like that. It's basically because there are so many of them and they're in so many different crevices. The likelihood of a complete decimation is fairly unlikely. So anything that's left over, the amount of them that are underground, and forgive me here, and that are inside of walls, that allows them to continue to exist. So that's kind of the idea behind it. It's not that they're like, special or know some type of kung fu or will bind together to make Ultron, should something happen. I think a lot of people don't know that. I think a lot of people don't know a lot of like sciencey things. I think they heard something once and they were like, whoa, roaches live forever. That makes a lot of sense. Anyway, so this guy, Gerber Kawasaki Wealth and Investment Management. Imagine that was his whole name. How great that would be. So what are you going to name your child? I'm thinking Gerber Kawasaki Wealth ampersand Investment Management. All right, here you go. Anyway, he said Bitcoin was like a roach. People didn't understand it. And now I read the paragraph to you that explains, like an immortal creature, Bitcoin is, I guess, here to stay. I would have chosen any other. He could have chosen like even like a tardigrade would have been good. Like the little water bears. Have you ever seen those? Go look up tardigrade. They're these little tiny water bears that can like survive in space. I would have chosen that over like something that we don't want to see inside of our houses. That's the Tesla investor news. Whoa, wealth and investment management. That's crazy. Those both have to do with money. All right, let's move on. Also in news as well, Coinbase will apparently be adding 3 new coins to their roadmap for the exchange. The exchange's main intent of serving as a bridge to Web3 has been accompanied by this announcement. I don't really think so. Apparently, Coinbase is thinking of adding tokens you probably have never heard of. They're all ERC20 based. One is called Audius. One is called Threshold. And one is called Axelar. That is Axelar. I assume mathematically there's one person who's heard of these coins. I give you a golf clap. To everyone else out there, Coinbase is basically trying to play catch up, do the same exact thing that Binance is and has been doing. Binance has basically every single coin listed on their platform at this point. I mean, who are we joking? So Coinbase has been trying to do the exact same thing because Coinbase has lost an enormous amount of market share to Binance over the course of the last like 7 years. It's not looking too hot for them like it was before. So cool. I think the idea of Web3 is kind of flimsy, at least at the moment. It's kind of like, I think a lot of people are throwing around the term Web3 to kind of push whatever they kind of want to push. But until we actually get a brand new usable iteration of the internet and not stuff that's simply going to be created and used on top of the already existing internet, it doesn't make a lot of sense then. The idea of Web3 is basically meant to be like decentralized and cryptocurrencies, using Ethereum or any other protocol that pops up as a new form of the internet. But until Ethereum has more than 15 transactions per second, we can't really do that. Can you imagine trying to use Ethereum as like your internet and you have like 8,000 people around the world using it and you're trying to load a photo and it takes like 3 minutes in a short time frame? Anyway, Coinbase is adding Audius, Threshold, and Axelar. Whoa, 3 coins I wanted. That's crazy how they know that. All right, let's move on. Also in popular news, for some reason, that's a very weird photo. I don't know why. What is that even supposed? Japan's new regulations allowing investors to trade using stablecoins like Tether are expected to be adopted no later than June of this year, according to a local financial authority. For those of you who've been missing it, Japan, South Korea, Thailand, and Malaysia have been in the news a lot the last couple of months. Basically, they're all either releasing, have released, or will be releasing by summertime their cryptocurrency regulations for the country. Japan has taken a long amount of time in trying to figure out exactly what to do with their cryptocurrency regulations. And I think we had news recently that they're going to be allowing crypto exchanges to be their own, not their own regulators, but like to use their own discretion as to which cryptocurrencies should be allowed within Japan on their cryptocurrency exchanges, as they historically, the last 5 years or so, have only allowed between, I think, 7 to 10 different cryptocurrencies. You might remember the really popular story from a couple of months ago where they finally allowed Cardano to actually be allowed in Japan as well, or within the Japanese border, if you will. And now they're working on stablecoin regulation, which apparently is also just as exciting to a lot of other people out there. The Financial Services Agency, or the FSA of Japan, is working on lifting the ban on domestic distributed stablecoins, planning to allow certain stablecoins later this year. They said this does not mean that all foreign products of so-called stablecoins would be allowed without any restriction, a spokesperson said to Cointelegraph. FSA will only allow stablecoins that successfully pass individual checks, ensuring that such cryptocurrencies are safe from the viewpoint of user protection, the FSA representative stated. Examples include foreign issuers in their countries being subject to equivalent regulations in Japan, with underlying assets being preserved appropriately, the spokesperson added. Wonderful. So we're going to get news at some point over the summer, the June of this year, that they're, exactly which stable coins are going to be allowed. I assume from the wording of it, forgive me here, but I assume that there are probably a couple of Japanese companies who are already making their own stable coins, and they're probably going to get first pick for the Japanese market. I mean, sure, why not? I think it's very weird, the picking and choosing, but I do understand, because a lot of the stuff in the cryptocurrency space can be quite moldy and toxic in a lot of different ways. But sure, why not? I'll state it always, as long as we hear news that they're going to be allowing crypto and not banning it, it's always a good day in the space, because remember a couple years ago, Japan was one of the first countries who was like, whoa, we are going to be banning the living heck out of this, because they thought it was too wild west, which is a weird thing. Why do all regulators keep using that term? Like, first of all, most people in crypto have probably never seen a Western, nonetheless a Western from the 1960s. And I'll even drag this one out. They probably have never seen the Wild Wild West with Will Smith in it. Yeah, see? Right. So I don't understand them using that term. It's also not the 1800s anymore. Like, they couldn't have thought of anything else except for Wild Wild West. Like, that's what crypto is to them. Anyway, that's the Japan regulators are going to be regulating stablecoins in the regulatory future. Regulation. And yeah, let's move on. And as always, this is going to be a huge topic of discussion until about the year 3000. Equities, precious metals, and cryptocurrencies have been on a tear. A tear? Who cares? During the last 3 weeks. And all eyes are now focused on the next Federal Open Market Committee FOMC meeting, which is just a couple of days away. On Friday, Federal Reserve Governor Christopher Waller said that he favors a 1/4 point benchmark rate increase at the next FOMC meeting. Analysts believe the current market trajectories would be dependent on the outcome of the next Fed meeting. Yes, my friends, we are here once again. We are at the point where everyone's paying attention to exactly how high interest rates are going to be moving. We've gotten to the point where it's no longer a discussion of an entire point or 0.75. Now the discussion is for 0.25 points, mainly because they're trying to get to 5% by March. I believe it's March. Without doing just one increase. They want to spread it out apparently across 3 other increases, I guess, to have mini shocks to the market, just to let the world know that they're in control. I don't know, some kind of weird power play. But yeah, we are getting closer and closer all the time to the end of this nonsense finally taking place. I, like many other people, am not only ready for spring and warmer weather, but I am also ready for the news in the cryptocurrency space to not have the words Federal Reserve in it for at least another year, because it's just been too much at this point, and no one actually really cares at this point in time. So yeah, get ready, hunker down, buckle down, shimmy down, whatever people have to do to get down, because this is coming. We probably will have 2 or 3 more rate increases, and after that, we should never hear from them again, at least for the rest of the year. Quite exciting. Whatever they do will affect the markets, and when they stop doing stuff, springtime, in no uncertain terms, get ready to make money. That's the easiest way of saying it. That's the Federal Reserve FOMC meeting. It's just a couple of days away. Yeah. Let's move on. Right. I do hope that you've all enjoyed. I do hope you all are having a great day, morning, afternoon, evening, wherever you are, wherever you might be. Do hope it's absolutely fantastic. Thank you all once again for watching, listening, commenting, subscribing, supporting all the new Patreon members. Hello, and thank you to all of you. And I will most certainly be talking to you all soon. See you.